Big demand for BMW's new electric car, and S&P says sell Tesla. Strap yourselves in, it's time for Motor Money. Hi, I'm Motley Full analyst Rex Moore. Welcome to another thrilling edition of Motor Money. And my co-pilot on this road trip is, as always, Motley Full senior auto analyst John Rosevear. Live and in color from, we're still not allowed to disclose his location for security reasons. John, welcome. How was your week?
My week was interesting. I had some adventures with my own car. Maybe we'll talk about that a little later.
Yeah.
Fun with a Cadillac. Yep.
Okay. Our first segment of the show, headlines from around the world of the autos. And the first headline from Bloomberg. BMW is saying demand for its new i3 electric car is exceeding expectations and it's considering a boost in production. So John, good news here, and it may be a bit different from what we've heard about these electric cars in the past, non-Tesla electric cars anyway. Does this mean that electric vehicles are gaining a bit of traction?
Certainly, demand has been impressive for this. This car doesn't even go on the market for another month or so yet. BMW's CFO came out this week and said they have 8,000 pre-orders, basically, deposits. People who've stepped up to say they want to buy the car. They were planning to build about 10,000 next year. It looks like they're going to be building considerably more. The car will go on sale in China and the US sometime in the first half of next year. It could turn out to be quite a hit if demand holds. What he said is that they will increase production to meet demand wherever demand ends up being, but based on current order rate, he's expecting to make some investments. So good news for them, and yeah, it is good. This is a car that's going to cost about $40,000, and it looks like it's got quite a bit of appeal.
All right, now that's considerably less than a Tesla Model S. However, Tesla, of course, no secret, they will look to sell lower priced vehicles in the future. Does this say anything here about the success Tesla may or may not have in the future?
Well, clearly there's some demand at the, the 45,000 price point, which is where we expect Tesla to come in. Tesla, though, says that their affordable car will have 200 miles of range. The range on this is 80 to 100 miles, and then you can get a system with it. You can get a system with it like on the Chevy Volt, where it has a little gas engine that acts as a generator to keep it going longer. But on the other hand, Tesla's frank that we need some battery advances to get from here to there, and they're hoping those come in the next couple of years. Does that mean Tesla will have a range advantage over BMW when they come to market? Not necessarily, because BMW may have the same batteries. So I guess what it means for Tesla is game on, and we'll see.
Interesting and exciting developments indeed. Our next headline, indeed. Pricing is out for Cadillac's new hybrid coupe, the ELR, and it will start at almost $76,000. But John, you're telling me the ELR is just a Cadillac version of the Chevy Volt, which costs less than half as much. So what is Cadillac's game plan here?
That's a good question. This car, of course, dates back to a concept car they showed all the way back in 2009. It was always the plan to have a Cadillac version, a Cadillac that used the Volt's technology in a coupe. This is a program that was stopped and started and canceled and restarted, and now it's coming out sort of near the end of the life of the Volt platform when they're going to be working on it. They're already working on the next Volt that will come out in a couple of years. I think their game plan here is to just kind of establish Cadillac as a player in this market at a price point where they hope to have an offering longer term. I don't think they're going to sell very much. We've heard Cadillac chief Bob Ferguson say that the ELR is probably going to be more or less sold by hand to select customers. They're not going to do a big ad blitz for it. I think volumes are going to be tiny, and it's going to be more of a positional offering, an offering they have so that they can have it, rather than something where they're looking to make a ton of money here.
So what would your take be on that strategy, and is there any danger of, if it's not quite up to Cadillac standards, of any brand damage there?
Well, we saw a pre-production version of the ELR a couple weeks ago in New York. It's a very nice car. The interior looks great. The interior is certainly up to snuff of recent Cadillacs that we've seen that have all had very impressive interiors, very competitive interiors. Build quality looks good. The design is sharp. But no, it's not an electric car with a 200-mile range, 300-mile range like the Teslas have. It's essentially a plug-in hybrid. Now, people love the Chevy Volt. It has among the highest owner satisfaction in the business, so the platform works very well. But will they be able to sell a lot of these at a $76,000 price tag? I don't think so. I think it's going to be a very select offering. Let's put it that way.
Okay. Final headline now from Automotive News. And Standard & Poor's is initiating coverage of Tesla Motors with a sell recommendation. So, John, first of all, what is your take on this one?
Well, my take on Tesla, it's interesting. This S&P analyst came out and said basically, we like the fundamental growth story here. We're iffy on the valuation of the stock, which of course is not all that far from $200 a share at this point. I think that's actually a fair take. Would I tell an investor right now who had been holding Tesla for a while to sell? I don't think I would. But certainly that investor and all Tesla investors should be prepared for some heavy chop, some heavy volatility. This is a stock that's flying. It's priced for perfection. The good news is the company has executed very well so far. The bad news is there are big competitors lurking. Tesla may not be able to get the margins its investors are hoping for. Technology challenges lie in wait. Challenges as it expands overseas lie in wait. New competitors coming, old competitors gearing up. There's a lot that's going to buffet for the stock. And even if Tesla is eventually a big success, getting from here to there is going to be a bumpy ride for shareholders. I think there's no doubt about that. So I think, while I would not echo his sell recommendation, I think the substance of his story is something I would agree with.
What makes this fun for us to cover anyway is a day after that, Wedbush Securities comes out with an outperform rating. They raised it from neutral to outperform. Just really points out this stock can really be volatile, and hopefully, if you own the company, you have it's just a small part of your portfolio, and other things are there to balance out this volatility.
Yeah, I wouldn't make Tesla your only holding. I wouldn't bet your whole retirement on it. This analyst, though, this other analyst who came out was interesting. They had an in-house survey showing strong demand for this future low-cost Tesla that we've talked about. But of course, so he's basing a price target on a car that doesn't exist and can't be built with current technology. That's where we're at with Tesla Motors right now. So interesting.
All right, hang on for the ride.
Interesting dynamic. Yeah, indeed.
Time now for that segment of the show where John and I go under the hood, deep under the hood, with a closer look at some of the big stories in the auto world. And we're really excited about this one because Ford earnings are coming out in a few days. And this is a big story, John. I want to start with, first of all, some of the numbers that Ford management has guided us toward, what you think the numbers will actually be.
Well, 17 analysts polled by Bloomberg came out with a consensus number of 38 cents a share Ford will earn. That's down a little from what they did last year. And I think the story they're looking at there is that their operating margins in North America, which is where most of their profits have been coming from lately, their operating margins here were around 12% a year ago. That's crazy. That's crazy good, I should say. Crazy good for a mass market automaker. They have guided to say, long-term, guys, it's going to be more like 10%. Even that is outstanding performance for a mass market automaker.
Yeah. Okay, I want to break it down a bit more now. Let's look at some segments. North America's always a big story, of course, and pickups in North America. What about that segment?
Well, Ford earned $2.3 billion before taxes a year ago in North America. They earned $2.3 billion last quarter. A little bit of consistency there. And like I said, margins may be getting squeezed a little bit. Incentives have been up on the pickups, as we've said. But the prices they've been getting, the average transaction prices have still been strong. Margins should still be 10%. Operating margins should still be 10% or a little more here, probably. But of course, the big story is that the pickup market has been booming. Pickups are high profit models. They sell in huge numbers, and Ford leads this market. GM has an all new pickup. Ford has cranked up their incentives to keep their sales lead, and it has worked while Ford has still been able to preserve good average transaction prices. During the third quarter, they broke 60,000 sales in every month, all 3 months of the pickups. Those are big, big numbers. The F-Series is up 21% year to date. And you know, Rex, it's not just the F-Series pickups. There are other profitable vehicles are doing well. Explorer is up 20% so far this year. Fusion is up 16.5%. The new Fusion assembly line in Michigan went live during the quarter. Fusion numbers could be up even more toward the end of the quarter and as we go into the fourth quarter. So very good story for them continues here in North America, even as competitors like GM are upping their game. They've still been able to hold on to a lot of advantage here.
Okay, moving overseas now, Ford has had some losses in Europe recently.
Yeah, they've had big losses. Lost $1.7 billion last year, $1.7 billion in Europe. And the problem, of course, in Europe is recessions have whacked new car sales. This is a story we've talked about a bit. And Ford's losses this year have continued to be big, but they're falling. $462 million in the first quarter, $348 million in the second quarter. Those are giant numbers, but at least the trend is in the right direction. And they have a restructuring plan underway. They announced it about a year ago, and they've been working hard on it and making good progress. The plan involved closing 3 factories. 2 of those closed during the quarter. They closed in the UK, so that will there'll be some charges associated with that, but that will help roll costs down. Other ongoing restructuring has been going on. They've been introducing new models, sort of changing their emphasis away from low-margin fleet sales, trying to grow the retail business, trying to grow the commercial truck fleet business. And their market share has been up in each of the last 6 months. It was up throughout the quarter. And sales have been up too in the last couple of months, even in down markets. Their sales were up 4.6% last month. And their retail market share is up to 8.4% in Europe, which is the highest it's been in quite a while. These are all promising signs. So do I think they'll make money in Europe this quarter? No, but I'm looking for a lower loss, excluding the one-time charges that'll be related to the factory closings.
And finally, in the huge and promising Chinese market, this has turned into a nice surprise, has it not?
We knew China was going to be good, but it's been real good. Ford had guided for a while that we're going to break even in China for the next few years. We're going to break even in Asia because we're investing a ton of money in building new factories. Ford's biggest building boom in decades. They're spending almost $5 billion to do this, which is huge money for Ford. And they had been breaking even more or less quarter to quarter, but they surprised us a little bit with a profit of $177 million last quarter. And the story there is just, we asked Ford's CFO Bob Shanks about this at the time. And has your investment cycle started to ease out? And he said, no, not at all. It's just that our profits have come up because our sales have been great. And they have been huge. Ford sales in China are up 51% year to date. And Ford had a great year last year. So this is quite a comparison. They are still making those heavy investments. They are still rolling out new models. But meanwhile, they are selling over 35,000 Focuses a month. That's almost twice what they sell here in the US. These are just huge numbers. And they're rolling out SUVs now. The EcoSport, which is their little global SUV, the Kuga, which is the Chinese version of the Escape. Those are both made in China. They're selling about 10,000 Kugas a month. It's increasing in popularity. They also import the Edge and Explorer from the United States and sell those. And they just launched at the end of August the Mondeo. The Mondeo is the Chinese version of the Fusion. And you know how big the Fusion has been here? It's catching attention in China as well, and sales are doing well too. The real story, though, are the market share numbers. They had 3% market share in 2012, and they said their goal was to get to 6% by 2015. Now they're telling us they may hit 5% by the end of this year, and if they don't hit 5%, they're going to come close. So a real good growth story here, and if they can sustain it as they continue to roll out new products, this is going to be quite a profit center for them in a couple of years.
Okay, as we look forward to the Ford earnings, are we motoring into earnings season for all the automakers?
Yes, we are. Yes, we are. General Motors comes up on October 30th. Toyota will follow shortly thereafter. Tesla Motors should be around the middle of next month. I'm not sure they've announced a date yet, but yes, this is definitely earnings seasons for automakers, so numbers will be on our mind for the next few weeks for sure.
And we will bring all the latest numbers to you. Let's close it out now with our fun and final segment. And today we'll do a bit of viewer mail, actual correspondence from actual viewers. Yes, we do have some viewers, and this one comes from Mr. Louis Toole. All you talk about is what effect a Chrysler IPO would have on Chrysler, but I would love to see you comment on what effects, positive, negative, neutral, a Chrysler IPO or a completed Chrysler Fiat merger would have for current Fiat shareholders. Why can't TMF analyze this situation in depth beyond talking about whether Chrysler IPO stock would be worth owning? Louis, you are in luck because John has been raring to answer this question for days now. Take it away, John.
Well, his first question was, will I get any benefits or anything like this as the IPO action itself happens? And the answer is no. This is one shareholder selling their shares in Chrysler if and when the IPO actually happens. We've talked about the story here. This is a UAW trust that got shares of Chrysler during the bankruptcy. They're looking to sell it. Fiat would like to buy it. They can't agree on price, so now the trust is pushing for an IPO. This isn't something that Fiat or Chrysler really wants. Indirect effects on Fiat stock? Well, if it actually goes public, merging Fiat and Chrysler, which is definitely Fiat's goal, becomes more of a hassle because they can't just buy the remaining shares outright from this trust. They have to wade into the public markets to do it. So in that sense, it would be a negative for Fiat's share price because the merger is likely to bring benefits to Fiat and to Fiat shareholders as these companies have had surprisingly good synergies. As if they can actually fully legally merge, they'll have more synergies. Fiat will have access to Chrysler's cash and resources in a way that it doesn't now, and it will benefit both companies. That will benefit shareholders. How much so, we don't know until we see the numbers. But to the extent that we move toward a Fiat-Chrysler merger, that's likely to be good for Fiat shareholders. To the extent that obstacles are thrown in the path of it, that's likely to be challenging, a headwind for Fiat stock.
Okay. Thanks as always, John. And folks, that's the end of the show because we're out of gas. This ride's over. For John Rosevear, I'm Rex Moore. Thanks for joining us, and we'll see you again next week.